maybe if you can't hear it in my accent, I am calling you from Boston, Massachusetts. And the reason I got into Social Security and Medicare is because my in-laws, they just didn't know what to do. They didn't know where to go. There were so many questions. And it was like, if I can help you, hopefully I can help other people as well. But a little bit about my family. If you've ever seen the movie The Town with Ben Affleck, if you haven't seen it, it's about bank robbers in Charlestown, Massachusetts. Excellent movie, by the way. If you've seen it, you've been in my living room, if you could believe that. They did not change anything from a couch to the drapes to pictures on the wall because they wanted to be authentic Charlestown. The reason I tell you about my family is because this is the family building of my wife, and that is her senior picture on the wall that they didn't change. So that's what I'm famous for, marrying not Ben Affleck, but the woman behind her. So if you haven't seen the movie, see it. It has nothing to do with Social Security outside of it's just trying to help my family, and I'm trying to help you guys understand the rules of Social Security to try to make the best decisions possible. And the way we do that was we break it up into 3 segments. I'll get back to that. And first, we're going to go into how retirement benefits are calculated. Then we're going to go into options for married couples and divorcees, so spousal, survivor. And then we're going to end with taxes and a retirement plan. Now, let me go back here. If you've not logged into your Social Security statement, do so today. Go through ssa.gov and log in. It's through id.me. It's a very secure government website, very easy to do. If you can easily do it on your phone. It takes 6 minutes. I know that because I helped an advisor 2 weeks ago, and he was on the phone with me. It took him 6 minutes while on the phone with me to do it. You'll be able to see an earnings history. You'll be able to see what projections of what your benefits should be. And make a habit sending this to your advisor every single January. It's because that's when the cost of living adjustments do get adjusted in January. And you can just see a history of what you've paid in. You want to make sure that if there's any discrepancies, you take care of it now. If you don't think there's ever going to be discrepancies, and I hope there's not, I had a gentleman about a month ago go into this exact presentation, log in, and find out just 2 years prior, he paid into Social Security, but they didn't have it recorded. Much easier to do within 2 years as opposed to 20 or even 30 years. Absolutely log in. You can actually see, and the earnings history is interesting. I found out I paid into Social Security when I was 16 years old delivering pizzas. So see what the earnings history is for you. So log into the statement, ssa.gov, id.me, very easy to do. So let's kick this off with how retirement benefits are calculated. If everyone here knows their full retirement age, great. But that is the fundamental aspect of understanding Social Security. It's because this is what every single calculation is going to be based off of. Now, you may hear me say 67. And your full retirement age is 66 years and 10 months. Or you may hear me say FRA. I mean full retirement age. You know I'm speaking the same language. We love abbreviations in this industry. We're going to keep it rolling. But if you don't know what your exact full retirement age is, it's based off the year in which you were born. 1954 before was age 66. Every single one of those people is taking their benefits. 1960 or later, it's age 67. That gradual change is from 1955 to 1959, where you can see they just added 2 months to the previous year as they transitioned from 66 to 67. Congress did this back in the 80s when they pushed back the full retirement age. But all this will be on your statement, so you can find out exactly when your full retirement age will be. So really, how do you even qualify for Social Security benefits? Did you pay in for your 40 quarters? If you have, you are eligible. Then they average out your 35 highest earning years to determine what your benefit is. If you don't have 35 years, that's okay. They throw in some zeros. But if you are approaching your full retirement age, if you're in your 60s, the number you see on your statement should be very, very accurate. I'll direct your attention to the green bars as full retirement age 67. If you take your full retirement, your benefits at your full retirement age, see 100%. you'll get 100% of your expected benefit. If you take your benefits early, your benefits will be permanently reduced. So if you take it 62, you're only getting 70% of your full retirement age benefit. If you look to maximize benefits, say till age 70, you get a guaranteed, can't guarantee anything in this business, you can guarantee this, 8% per year increase from age 68, 69, and 70. Now, this is in addition to any cost of living adjustments. So if you were trying to wait till 68, you get the 8% plus the 2.5% cost of living adjustment that they announced for 2025. All cost of living adjustments get announced in October and reflected in your statement or in your check if you're currently collecting of January of that next year. So if you were to take benefits full retirement age, you get 100%. Take benefits early, it gets permanently reduced. Look to maximize, you get that per year. It accumulates every single month increase and is only going to benefit your check, but could benefit your family's check as well. Now, one of the most common things I do every day outside of these presentations is I meet with a lot of families and they ask me the most common question, and it's not about the moon cycle. It is, when should I take my Social Security? Now, I don't have a crystal ball. I can't predict the day you are going to pass away, because if I did, I'd give perfect Social Security advice. However, we could talk about your health, your family's health, your financial health. But one of the most common things I'm going to ask you, one of the first things is, are you still working? Because that's important. If you are under your full retirement age and you're still working, there's something called an earnings limit, which is how much you can earn before they start doing a withholding of Social Security benefits. That number is $23,400 for 2025. So a lot of people say, well, between my taxes, my contributing to my 401k, health insurance, I'll get that under the 23 number. Unfortunately, that's not the case. It is a gross number, not a net. They put this in there if you're under your full retirement age to actively discourage you from working full time and collecting Social Security benefits. If you are older than your full retirement age, you can earn as much as you would like and still collect Social Security benefits. This is only for those looking to take benefits before full retirement age and still working. Now, this earnings limit applies to any benefits you receive. It could be your own retirement. It could be spousal benefits. It could be survivor or divorce. If you're collecting a check from Social Security and you're under full retirement age, you will be subject to the earnings limit. Now, a couple of the most common questions I receive is, what does the earnings limit even apply to? Well, it looks at your wages and your wages only. So think your paychecks you get from your employer. If you were to take money from a pension, take an IRA distributions, have passive rental income, that is not considered earned income and thus not part of the earnings limit. Another common question is, when does the earnings test take effect? So let's use July as an example. You plan on retiring in July. Anything you've earned from January through June is not counted for the earnings test. It's if you start retiring in July, you get your first Social Security check in July, that is when they will start looking at the earnings test. And the last common question I receive here is, I'm married. My spouse is still working. I'm not working. Does their income affect the earnings test? We file our taxes together, and actually it does not. Though you do file your taxes jointly, they only look at the individual for the earnings test. But if you got anything from here, under full retirement age, still working, there's a limit of how much you can earn before they start doing withholding. So let's get into this meat of the presentation. This is for the options for married couples and divorcees. So let's start off with spousal benefits. When I think of spousal benefits, I need you to think of it into two segments. First is, what is the amount I'm entitled to that I'm basing this money off of? And the second is, what's the percentage of that amount? So you could see on the screen, spousal benefits maximize when you are your own full retirement age, 67, and that means you get half of your spouse's full retirement age benefit. A lot of people say, oh, at 62, I'll collect half. Unfortunately, you cannot. You can see the sliding scale there. We'll just go by the gray bars. You would get 32.5%. So your age, when you claim either your own benefit or a spousal, has a lasting effect. Now, what's the amount that you are talking about? If we're saying, oh, I'm 67, I'm going to take half. Well, it's always based off of your spouse's full retirement age benefit, regardless of when they take that benefit. So if their benefit at 67 is $3,000, you would get up to half of that $3,000. If they take early, they take at 62, their check is reduced to $2,000 a month. It's irrelevant for spousal benefits. You're still based off of that $3,000 age 67 number. And on the other side, say they wait till 70, their check goes to $4,000. Great for their check. For spousal benefits, doesn't matter. It's always based off full retirement age amount. In that $3,000 example, the way you'd maximize that is you being your own full retirement age, getting $1,500 in the example I just gave. Important point to note is that your spouse does need to be claiming their benefit in order for you to receive a spousal benefit off of them. And in most cases, majority of cases, you don't really have any spousal switch up options where you can't take a spousal benefit and let yours grow. What happens is when you apply for benefits, they see what you're eligible for and those amounts, and Social Security gives you the higher of those amounts. There are some intricacies, but by and large, that's not the case. And you want to see if you even qualify for Social Security benefits? This is what you do. You look at your statement, you look at your spouse's statement. If your benefit at your full retirement age is more than half of their benefit at full retirement age, so their benefit at full retirement age is $3,000, your benefit at your full retirement age is $2,000, that means you're not going to get a spousal benefit at all. Many people are surprised by that. Just for your planning purposes, that is probably the best way you can do that for just understanding the concepts of spousal benefits. Now, let's move on from spousal to what I think is the most important point of today, and that is survivor benefits. Now, the reason it's so important is because not only did you just lose a spouse and the human concept of that, but now you're going from getting 2 Social Security checks down to 1. We want to try to make sure that we maximize those benefits. So survivor benefits, they're based off of 2 things yet again. What is the dollar amount you are entitled to? And then the percentage of that amount. Same concept of spousal, couple of differences. First, survivor benefits, these start 2 years earlier. They start as early as age 60, while your own and spousal benefits, those start at 62. Now, you can see the sliding scale in the percentages. If you were to take a survivor benefit at age 60, you're getting 71.5%. If you take survivor benefits, and hope that's everyone here, in your 80s or 90s, you'll get 100% of that benefit. Anything older than your full retirement age, you will get 100% of that benefit. Now, this is the point that I make to many couples where I say, hey, it's not a me decision, it's a we decision. Because as the higher earner, the lower earner is going to take your benefit if you pass away. You actually have switch up options when it comes to survivor. We'll get to that in a minute. But your claiming decision has a lasting effect. Think whatever you claim, your spouse is going to inherit that claiming decision. So if you take it benefits 67, your benefits $3,000, assuming you're passing away into your 80s, your spouse is going to receive up to 100% of that $3,000. If you take your benefit at 70, your check gets increased by $4,000. Well, your spouse, if you pass away, inherits that $4,000. And if you take benefits early, it's something called a widow limit. I'll show you in a second. But you will get a reduced amount. Say you go from $3,000 to $2,500. Well, your spouse inherits that claiming decision. Now, if they were getting 2,500 compared to 4,000, there's a lot of, for your specific cases, could be the difference of a couple hundred, even a couple $1,000s per month for the remainder of their life. So I'm not saying everyone on this call needs to wait till 70. I'm not saying that whatsoever. Just understand where Social Security fits in the piece of your retirement. Understand as the higher earner, maybe it's probably in your best interest to get to full retirement age. Maybe that's maximizing for you. Maybe it's 68. However you detail that out, reach out to your financial advisor to see what puzzle pieces fit. Because what maximizes for you doesn't necessarily mean that's maximizing for the person, for a neighbor. Just understand, as a high earner, the lasting effect that has for your claiming decision. So a couple of the most common questions I receive is, what if my spouse passed away before they claimed? What happens? Well, it's of course based off full retirement age. It's a fundamental aspect here. If you had a spouse unfortunately pass away at age 60, they never claimed their benefit, well, Social Security will give you, the surviving spouse, their age 67 full retirement age benefit. You don't have to, in theory, have been that age. They're not going to penalize you for having a spouse pass away and not collect benefits. And on the other side, say you have a spouse age 68 passes away, well, they'll give you as if their amount as if they claimed on their day of death. So I showed you that extra 8% per year. That does accrue every single month. So say you had a spouse who was 68 and a half. You get the 8% plus the 4%. So you're talking an extra 12% on top of their full retirement age benefit. Once again, survivor benefits just highlight the importance of having a we discussion, not just a me discussion when it comes to Social Security. Just because it is so important, I want to show you once again the deceased claiming decision and the effect it may have. If you claimed at your full retirement age, you will get the amount the deceased receiving at death. If they passed away before and did not claim, you will get full retirement age benefits. If they passed away after full retirement age, you will get, they call it credits. You get that extra 8% or whatever the percentage points get. And then if you claim before, it's called a widow limit. What you need to know is if you claim before, you're going to get less than your full retirement age benefit. Now, I mentioned a few moments ago that spousal benefits don't really have a switch up option where you go for yours and then switch up to your spouse's or vice versa. You do have this option as a widow. Now, the two options that are available to you are going to be very evident based off of your benefit amount and your spouse's benefit amount. But I'll go over both. So option one is typically for couples that have similar Social Security benefit amounts. So this is where you can start with a reduced survivor. You saw the percentages before. And then you can switch to your own retirement benefit. You can switch to your own retirement, let yours grow till 70 and then turn yours on then. I find this is with, like I said, two very similar income earners utilize this. Once again, that percentages and everything is based off of your age. And of course, there is that earnings test. Option two, this is a wider disparity of income earners. So higher earners, 3,000, lower earners, 1,000, like that type of gap. And this is where you start with your own reduced retirement benefit. And then when you turn full retirement age, you get 100% of your deceased spouse's full retirement age benefit. So there are switch up options. Just know if this is unfortunately your situation, you are in your 60s and you want to see what options are for you, reach out to your financial advisor because there are options available to you as a widow. So let's briefly move on to divorce benefits. And the magic number to know is 10 years. So if you get married, buckle up because you're in it for a decade. Because if you are married for 10 years, you get the same benefits I just spoke about for spousal and survivor. Same percentages, everything is the exact same, except for spousal benefits. I said that your spouse does need to be claiming their benefit in order for you to receive a spousal benefit off of them. If you are divorced, your spouse does not need to be claiming their benefit for you to receive a benefit off of them, as long as you were married for 10 consecutive years. So my wife, who is famously in that picture, we were married for just over 8 years. So I joke, I'm like, just 2 more years, honey, in the eyes of Social Security. And if you can believe it, she finally finds that funny. So it took a while for her to find it funny, but 10 consecutive years in order to get those benefits. Now, if you get remarried, half of marriages end in divorce, and half of those people get remarried to someone else. Your remarriage decision does have an effect on your Social Security. What your ex decides to do does not have an effect. So he or she could get married 100 more times. It has zero effect on your Social Security, but your decision on who you remarry, if you remarry, does. So we talked about the 10 years. That's all set. Now it's age 60. If you get remarried before age 60, you lose both the spousal and survivor benefits off of your ex-spouse. You lose them. If you get remarried after age 60, you lose the spousal benefits, but you keep the survivor. If you don't believe me, I met with 2 separate women in the past 2 weeks, 59, and I begged them to not get remarried until they were 60. If you're 40, and I'm not going to stop you at that point. However, 10 years and then your remarriage decision does have an effect. If your second marriage ends in divorce, annulment, or death, you could become re-entitled to the benefits off of your first marriage. But long story short, just marry wisely. 10 years before and after age 60 are the big rules. And before I take any questions, I will briefly discuss taxes in your retirement plan. I'm no CPA, however, just understanding that Social Security is taxed and what percentage of it is taxed, how they come up with it, just to give a quick overview. So, majority of couples are going to fall into this. If you are married filing jointly, you can see in the bottom right, $44,000 between you and your spouse. If you've made money from an IRA, Social Security, wages, whatever it is, 85% of your benefits are eligible to be taxed. You're not being taxed 85%. 85% of your benefits are eligible to be taxed. They'll be taxed at your ordinary income rates. So whatever, if that's 20, 22, 24, whatever ends up being for your particular tax bracket. And how they find this out is a formula called combined income. They take your AGI, which is your adjusted gross income. Pretty much if you've made money, that is your AGI. I will show you on the next page some exceptions. That's an IRA distribution, wages, if you've capital gain on a house, adjusted gross income. Then they take tax exempt income, which are just municipal bonds, and then they take half of Social Security. The reason I tell you this is if you and your spouse's Social Security for the year is $60,000, they're only going to look at $30,000 of it to determine which tax bracket you are in. So if you work with a financial advisor, they can make sure by doing this combined income formula that you stay within the tax bracket you intend to. Most cases that won't be the issue, but they take your AGI, tax exempt income, then half of Social Security to determine which tax bracket you're in. Say they determine you're in the 22nd tax bracket. From there, then they take 85% of your benefits will be taxed at that 22%. So work with a financial advisor, but Social Security will be taxed, and AGI is going to be a big driver of that. Here are some exceptions to your adjusted gross income. Qualified charitable distributions, pensions, HSAs, but you got Roth 401k and Roth IRA. If you take a distribution from a Roth account, it is not part of your AGI and then thus not part of the combined income formula. So many people have their regular IRA and their Roth IRA. Work with your advisor to see how those distributions could affect you and your tax bracket. And I'll end today with a little bit of an acronym. And because we love those, we love abbreviations. And when you look at Social Security, I want you to look at it through a lens. LENS. First is life expectancy. I know we don't know the day we're going to die. I know that. I give perfect Social Security advice. But when you think of taking Social Security, understand what your life expectancy is. Understand what your spouse's life expectancy is. I don't want you to take benefits early and you still have parents that are living into their 90s, because I want to make sure that you're living fulfilling life in retirement. E is employment. We talked about that earnings test. If you're under full retirement age and you're still working full time, probably not in your best interest to take that. N is needs. Social Security should make up 40% of your pre-retirement income needs. 40%. That is a piece of the puzzle. We want to make sure we're maximizing that. What does maximizing mean for you and your spouse? Well, work with your advisor to see when the best time is for that. And lastly, S is, you can guess it, spouse. They spend a lot of time on survivor benefits because they are so important. Understanding, hey, I'm the higher earner. When should I take my benefit? I'm the lower earner. Much more flexibility. When should I take my benefit? Do this with your spouse in mind.